And again, just welcome everybody to the Hub session. This is going to be a very exciting Hub session. We're talking finance. We're talking, the stuff that makes projects work. The piece that everybody loses sleep over. The stuff that you can read about in the news all the time. This is the area that, without the numbers and the finance and things making sense, all of the amazing innovations that we're trying to do just don't work, right? And so we're very lucky to have Tim Buckley here with us today to lead or at least start the conversation, and then we'll have a very broad conversation. The reason we're recording is that the community, this Hub community, is quite large. There are a few hundred people who regularly receive the messages. People come in and out. We've got an amazing reach when it comes to the sessions as we videotape them, so the community benefits from the work that we do. It's a very open conversation, and always that if there's anything that you think later, you go, well, hold on a second, I didn't think I really wanted to say that. Could you just cut that out? Maurice is there to get rid of anything that you're not happy with. So don't feel that you can't just be yourself. Just ask whatever you need to ask. And afterwards, we've always got Maurice to edit things out if we feel that we said something we shouldn't have. So today, with Tim Buckley, what I was going to actually ask Tim, you've got an incredible background, and I thought it might be even better if you just do an introduction of yourself and what you do. Maurice, and I was going to ask you, should we do a quick breakout to let people have a chat, or did you feel we should just jump straight into the session today?
I've got an opinion on that. I've seen what Tim has to share, so I think everyone should get ready to strap in because we're jumping in to the deep end. So I think since we're a small group today, everyone can be relatively friendly. No one here bites. So maybe we can just get started.
Yeah, great. Good call. And James, you're in for an hour, and then you've got to leave. And geographically, you and Anthony are not too far away from each other.
Where are you based at?
I'm in the Hunter.
No, you are. Anthony's New South Wales.
Myself? Yeah. I'm in Bellingen, near Coffs Harbour, Bellingen, New South Wales. Yeah.
A bit further north.
So maybe it might be an opportunity to catch up maybe next week when we come to Newcastle. So having said that, then Tim, if you're happy to jump off mute, just give people a bit of the sense of the areas, because there's so many things to talk about in terms of your background, and I know everybody's very excited to jump into this session. Quick introduction, and maybe take over the screen and share what you want to share. So Tim, welcome. We're really excited to have you.
Thank you, and happy to be here today. I am very passionate about the topic of the global energy transition. But Vlad, to your question, and it might give you a context of where I come from and how I view the world. I spent about 20 plus years working in finance. I was managing director, head of equity research at Citigroup for 17 years. And so I've spent a lot of my career in global finance, looking at Australia, looking at Asia, and talking to global investors about companies. So my background is very much finance and the stock market. And for a decade, I was on the commitments committee at Citigroup. So I evaluated all of the deals Citi was working on. So I come very much from a finance background. And I had a quite major change in my career trajectory. Probably 14 years ago, I moved into a clean tech startup looking at, so the logic was a mate of mine had set it up, and he needed some extra firepower in the team, so I agreed to join him. But it was a startup which was based on climate change, but saying, look, where there is a massive disruption and threat, there is also massive opportunity. And so his business idea was, let's actually invest in the technology disruptors that were going to benefit from delivering decarbonisation globally. So we invested in a startup for listed equities globally backed by Westpac, and we ran it for about 4 years, or I co-ran it for 4 years. In the end, we were way too ahead of our time. The technology change was extreme. My risk profile is far more conservative than my mates. And the more we studied the companies, the more we realized, like I'd be talking to battery companies every day, and there were 20 different battery promoters all saying we've got the best things in sliced bread. And the ability of the market to actually evaluate that, at the end of the day, it's the buyer that evaluates it. And so one of them's going to do really well, but a lot of them would go by the wayside. So the volatility in the sector and the policy changing, the implications of policies meant that I actually went back to Westpac and said, look, we're just too early. We're ahead of our time, and the technology, the risk for investors is too high for my liking and for their liking. And at the end of the day, when you're investing, you have to invest with a clear acknowledgement that you need to deliver an acceptable risk-adjusted return over the long term to deliver value for shareholders. And anyway, so after that, I had a rather unusual conversation with an environmental strategist, and he was talking about the role of finance in the climate movement. And I said, well, as the head of research at the biggest bank in the world, I have never met an environmentalist, and I've certainly not actually talked to politicians either. So the impact of government and the impact of environmentalists is really, really limited when it comes to the world of finance. It's a completely different space, but in my view, a very powerful space. And anyway, he said, well, would you mind coming in and educating the environmental movement on how they should interact with finance? Because they think they're talking to finance, yet clearly they're doing all this work, but not actually getting their message across. So anyway, I bit and I agreed to come in and write some research. He asked me to evaluate a couple of Indian billionaire projects in Australia in the Galilee. And after a week, I rang him back and said, oh, look, you're wasting your money. This one's going to go bankrupt within a year. And there's no way this project's ever going to fly. And anyway, so he goes, well, we'd like you to do the analysis. We want to make sure that we shut the gate. We want to hammer home the conclusion. That project was GVK. GVK Reddy was at the time a billionaire in India. He did go bankrupt, and the project is still sitting mothballed, having not advanced one iota in more than a decade. It's got no staff. But the second one he asked me to evaluate was Adani, and Adani's been rather flavor of the year in the last couple of months, the biggest corporate fraud in world history, allegedly, by Hindenburg Research, a short seller in New York. Anyway, I said, oh, that one again's not viable either, but when you're betting against one of the most powerful men in the world, the project might be unviable, but when he's got unlimited money and a desire to win, he can
create the win.
Yeah, he will. Well, I would now argue it was a Pyrrhic victory. My analysis was right. The project was not viable, but at the end of the day, if you're a billionaire, it doesn't have to be viable if you're willing to throw $5 billion at the project. And so it's a Pyrrhic victory. He effectively has produced some coal. He's producing about 6 million tons per annum as of, I don't know, a month ago. That's the run rate 3 months ago. It's a decade late, and it's cost billions more than he intended, and the scale of production's a tenth of what he was planning more than a decade ago. So as I said,
still a win
for him or for us.
Yeah, well, that's right. Marketing wise, right?
Well, yeah, there's a lot of ego when billionaires are involved, and I think ultimately, if, as he said about 2 years ago, he wishes he'd never heard of Australia a decade ago, because he feels he got conned that the people of Australia and the governments of Australia wanted the project. But anyway, let me maybe give you the context of why the environmentalists were so anti the Adani project. At the time, it was aiming to develop the biggest new coal basin in the world. It was had 10 of the 10 largest thermal coal mine development proposals in the world. And a decade later, to your point, Vlad, he might argue he won. He did get the mine up and running. massively over budget, massively over time, but at a 1/10 of the size that he wanted to do. But none of the other 9 projects have even one employee working on them a decade later. They're all totally mothballed. And yeah, so I would argue we've gone from 320 million tonnes per annum of coal. That was the targeted production in 2010. And in 2023, they're literally producing 6 million tonnes per annum. So yeah, I think we'll pocket that one as a win, even if he notionally won.
That's right. Agreed.
Yeah, Robert.
Sorry to interrupt, Tim. We hear about 118 coal and gas projects that are, sitting there ready for approval, and the minister seems to have her pen poised, ready to approve them. How many of those are actually real and tangible, and not just things that have been submitted and are unlikely to go ahead? Do you have a feeling on whether that's a crisis matter for us to worry about or not?
Yeah, thanks, Robert. It is a crisis issue, and it certainly gets to the crux of the work I'm doing. Sorry, so we're banging. I'm going to just give me 10 seconds. I'll try and get rid of them.
No dramas at all. That's fine. It's going to be interesting to hear Tim's opinion on that, because there's so much out there where people need to submit just to get it in the pipeline. But from a reality perspective, I also wonder how many, whether it's like 20% are real, maybe 10. I would be surprised if they're high percentages. So welcome back, Tim. I was just saying that so many things we see, people just need to put in a stake in the ground to say they're interested, but what's actually real when it comes to it. And we see that with a lot of other projects, whether it be manufacturing or any other type of even recycling, production. People put it out there and then work it out once they get some sort of approvals. Like it's sort of so go ahead, Tim.
Yeah, I think they are real projects. They are, project proposals. How many of them will actually get off the ground? I would say a very limited number of them. But as the International Energy Agency says, we really, as a world, can't afford to have any of these projects go ahead. And so some of them might, a couple of them might, but if the majority went ahead, we might as well kiss 1.5 degrees goodbye, and we'll actually kiss 2 degrees. These are not small projects. They are world significant projects. Like the development of the Beetaloo, the development of Scarborough. These are huge climate bombs, as large as the Galilee, as large as Adani's Carmichael coal mine. But I am more optimistic than most. A lot of environmentalists have spent decades of their life fighting against these sort of companies like Exxon and Chevron, who absolutely undermine the science. I was going to say they ignore the climate science, but they do a lot worse than that. They undermine the science. They deliberately delay, deceive, dismember, bribe, you name it, to push the climate science off the top of the front of the page. But today, I think the science is really clear, and the general public's understanding of the science is really a lot better. The IPCC report, the extreme fire events, the extreme flooding events, the crap about that we heard from the previous government saying, oh, the cost of acting on climate science is too high for Australia. Now, there is a cost of acting on the climate science, but the cost of inaction has been proven to be far, far bigger, and we all collectively wear that cost. And so when Jim Chalmers, the Treasurer of Australia, says, look, last year we saw $8.5 billion of community costs from 3 flooding events, it's right in the front of everyone's mind that flooding is a real cost, and flooding is extreme weather events becoming more extreme and more frequent than as the scientists have been predicting, as the Exxon scientists predicted 40 years ago. So the cost of inaction is just rising. So getting back to your question, Robert, I would actually argue finance will play a critical role. I don't believe a lot of these projects will receive financing. And maybe the example of that, about 3-4 years ago, we were tracking the number of formal coal exclusion policies by leading global financial institutions. And it was literally every second or third day for about 2 years, I was having to update our list and put out news alerts that major financial institutions were putting formal limits or exclusions on whether they would lend to any new coal-fired power plant, any new coal mine. A lot of them clarified that they were only talking about thermal coal, not coking coal, for coking coal is used in steel. But at the end of the day, formal exclusions, formal end dates. Like Macquarie Group has an exclusion. Their coal exposure on book is about $100 million. It's down by 90+%. They're also one of the biggest investors in renewables, so they see the opportunity. But they've said by 2024, they'll have no more exposure to coal. Just this week, we saw the first big American insurer, Chubb Insurance, say they will no longer lend to new oil and gas projects at all. Sorry, not lend, insure new oil and gas projects. So that's on oil and gas. Now, most of us still drive internal combustion engines. We are going to be using oil for the next decade or two. Now, in China, I probably wouldn't even say that. For the next decade, they'll be driving internal combustion engines. I'll come back to that in my formal presentation. But the world is moving at an enormous rate of knots now. And so finance is not stupid. I mean, they have formal pledges relating to the Glasgow Finance Alliance for Net Zero Emissions, which says you have to have a path aligned with the Science-Based Target Initiative. They've pledged that they'll get net zero emissions by 2050. They've pledged to an interim 2030 target. In other words, this decade, real action this decade. But we were tracking literally hundreds of globally significant financial institutions with formal coal exclusion and end dates. Now, I say we were tracking it. Putin did throw a massive, massive problem on the table. His invasion of Ukraine and the resulting sanctions against Russia have meant the price of oil, gas, and coal have gone through the roof in the last year. Energy security is now on the front of every politician's mind in the world. And so President Biden's gone from being the biggest advocate for acting on the climate science to last year being, no, America must produce more oil and more gas. And America will be the biggest exporter of LNG in the world this year, and they'll probably increase 20 or 30% next year and the year after. So it's put in a bit of a disruptor, but I would actually argue it's also accelerating the drive to decarbonisation. I'll come to that in my formal presentation. So at the end of the day, we have to push back on our politicians. We have to hold them to intergenerational equity. We have to hold them to their political commitments in the elections. We have to hold them to the science. So I would suggest that most of those projects won't see the light of day. Most of them won't get financing, but we can't presume that, because at the end of the day, if Exxon can build projects, they will, because they make 50, 60, 70% returns on those projects at profit margins at the moment. They're making out like war profiteers. They are war profiteering. And so they've got every incentive to continue doing that for as long as we're willing to let them do it. So we can't take anything for granted. If you've got a vested interest, they can externalize all of the cost onto everyone else and they can internalize the profits. They will do it.
Thank you, Tim. Appreciate it. Anthony, you had a question?
First of all, thanks so much, Tim. You haven't even started your formal presentation and already so much insight. Really appreciated. You alluded to projects that are waiting to be signed off. In your opinion, a lot of them won't be signed off. You also mentioned that there's a role that voters have to play at election time to hold politicians accountable. Do you have any insights to share as to, I mean, we know we're dicing with danger. I don't think any educated, sensible politician would argue that climate change is a real issue. I remember watching just recently a Global Economic Forum short clip, which explained that we're on the brink with a few things. We're right on the brink. So I guess the question that I want to pose is, what do you think would stop the various politicians, not just in our country, but all around the world, from really legislating in favor of the survival of humanity? What stops us from making it unlawful to put forward a new project? Or there's something I'm just failing to understand. Why are we still putting these projects on the table and approving them if we know they're going to suffocate the planet and humanity? I'm at a loss.
Yeah, let me be blunt. I'm pretty blunt. I think Maurice knows that. That's why he invited me. Australia is the third largest fossil fuel exporter in the world. Right? It's as simple as finance. It's as simple as vested interests. We are not an insignificant player in the world, as our previous idiot of a prime minister said. He was going, oh, Australia is only 1.3% of the world population. We're 1.5% of the world's emissions. It makes no difference what Australia does. Now, that is straight out of APIA and the Minerals Council coal and gas lobbyist playbook, and it's absolute tripe. Australia is about 5% of the world's emissions when you take into account Scope 1, Scope 2, and Scope 3. And I'm not a scientist, I'm a finance analyst. Scope 1 is your direct emissions, Scope 2 is your indirect, like electricity, and Scope 3 for Australia is huge. That is largely our exported emissions. So we produce and export 55% of the world's coking coal for the world's steel industry. We also produce and export 38% of the world's iron ore for the world's steel industry. So when China is 50% of the world's steel production, but they're using Australian iron ore and Australian coking coal to make that steel. So if they decarbonize their steel industry, our industry is really negatively impacted. But our contribution to the Chinese steel sector emissions is really high. We make rephrase that. The coking coal industry makes a 70% profit margin every time they sell a ton of coal to China and it gets burnt. We collectively, the world pays the price on that because of the global, there's only one atmosphere globally, statement of the obvious. But the idea in accounting and in climate is that we've got a border. There's a national border, and it doesn't matter if our exports cause global warming global emissions of carbon offshore. Oh, there's a formal accounting convention that says that's exported. It's not our problem. Well, it is our problem. There's only one atmosphere, and we're a major profiteer. We're a carbon profiteer, and we're right up there with Saudi Arabia and Russia. Right? I'm going to call it out. That's Australia. That's our country. And so when morons talk about Australia's contributions irrelevant and it's all up to those evil people in China, it's just rubbish. It's talking points. Australia's emissions are some of the highest in the world per capita, and you've got to look at the total emissions. And so I make a really strong point, and if we get to the presentation, I'm happy to talk, happy to answer questions. It's probably far more engaging for all of us.
We'll get there. Yeah.
But China is the world's leader in every industry in decarbonisation. I'll say it again, the world leading developer, investor, employer, and exporter of every zero emissions technology there is. Now, I'm talking electrolyzers, I'm talking wind and solar manufacturing and installation, I'm talking about batteries, I'm talking about electric vehicles, I'm talking about hydro, I'm talking about nuclear, I'm talking about energy efficiency. You name it, every industry, China is the world's leader if it relates to decarbonisation. Sorry, I left about 5 off. They're the world's #1 processor of lithium. They're the world's #1 processor of rare earths. They're the world's #1 processor of copper and nickel. They dominate all the global supply chains, which is why Putin's invasion's really done an amazing reality check. Okay, sure, it caught the Germans and the Europeans out with their pants down totally. The tide goes out, they were swimming naked. They had tied their energy security to Russia. But what it reminded America and President Biden and even the Republicans on was that America, like Japan, like Korea, like Australia, like Europe, is all tied to supply chains dominated by the Chinese. Now, I'm in no way anti-China. China is the world's biggest investor in decarbonisation technologies. Don't believe what the Murdoch press publishes all the time. China is the world's biggest investor. They're 4 times bigger investor in decarbonisation technologies than America is. So they're part of the solution. They're the #1 country in the world, but you can pick facts. They are the biggest developer and consumer of coal in the world. They're the world's biggest producer of steel in the world. China is just an enormous country, and it's really hard to underestimate how big the country is. But at the end of the day, they have a development agenda. They're 10, 20 years behind the OECD in terms of development, and they are still growing their economy at twice the rate we are, or America is, or Europe is. So by definition, they do emit a lot more, and they're earlier in their trajectory. But China is a world leader. So getting back to the question, Australia, sorry, it's a very long-winded answer to your question. Australia is corrupted by the industry that is really powerful here. That is, we are equal #1 LNG exporter in the world. We're #1 exporter of coking coal in the world. And I'll just say it again, 55% of the world's seaborne coking coal comes from Australia, almost all of it from Queensland. And then 20% of the world's thermal coal exports, seaborne thermal coal exports, comes from Australia, mostly New South Wales. So if you don't think the New South Wales Minerals Council corrupts our New South Wales government, just as the QRC, Queensland Resources Council, corrupts the Queensland state government, and APIA corrupts all of our governments, the Australian fossil fuel lobby group. And I'll give you one final example of why I work in this area. Multinationals in Australia pay next to zero corporate tax in Australia, right? So when we talk about Shell, BP, Chevron, and Exxon, they pay collectively $30 of corporate tax last year in Australia. Not 30 billion, not 30 million, $30. Like one of them accidentally sent in a check for $30 for some reason. They might as well just pay zero, which is what they paid in each of the last 7 years. I find that obscene that 4 of the most profitable companies in the world, 4 of the biggest operators using Australia's public resources, get away with absolute tax avoidance. They pay zero tax. And so when I get it, BHP gets attacked, for example, by environmentalists for its environmental issues. And I have to remind them, BHP is Australia's biggest corporate taxpayer and has been every year for a decade. Like #1, not in the top 50, they're #1. Rio is in the top 3 or 4 every year. And so they're Australian companies, they're Australian listed. Franking is a beautiful device in my view because it encourages Australian companies to pay Australian tax. Now, Exxon pays a huge amount of tax in America, but they pay zero in Australia. How do we allow that to happen? So I've been lobbying Jim Chalmers and the federal government aggressively to do a multinational tax review. It's underway, but it's a decade overdue. And I can attack the fossil fuel companies because they're busy destroying our planet. But then you have to call out Google and Amazon and all of the IT, Twitter, LinkedIn. None of them pay us. You try and get a tax invoice from Twitter or LinkedIn, you can't. Right? There's certainly no GST line, and you won't get an Australian invoice no matter what and how many times you ask them, because they're just not held to account by a tax office. So these multinationals not only are destroying the planet, but they're also undermining our democracy because they don't pay corporate tax, they pay bugger all royalties, and then they use their war profits to undermine our government because we don't have proper donation reform. They shouldn't be allowed, foreign multinationals should not be allowed to donate to our political parties, yet they can.
So Tim, what might be really worthwhile at this point as well, and thank you for that, is I think we should probably dive into the presentation that you want to share, because I think what happens is that, even as you're speaking as well, one of the things that James McGregor does a lot of is works in the different financial models, and something that we're seeing all the time is that the money side of things is what makes things work, for good or for bad, as you know. And I think you've answered that question. You've commented on, both Anthony and Robert's questions. The message is so clear. The finance, the models, they're the things that make things work. And we're seeing more and more innovative financial solutions, even companies like there's so many actually that are sitting up there. They're putting some of their profits towards having funds that they can invest and reinvest. And I know that's something that James, hopefully you'll connect and have a conversation about that, about setting up a fund for that kind of work. What that involves. But I think it's important to note that even the large companies like your Origins, like Origin Energy, are coming out with innovative ways to push things that would not be in their space normally. So for example, energy, Origin Energy, electricity company, you can have free electricity during the day if you take out a weekly lease on an electric vehicle. $250 a week. I think the most is $350 a week. If your employer wants to salary sacrifice for you, you can have a brand new Tesla paying weekly, to have that, just like a mobile phone or a phone, contract, and have free electricity during the day. These models are going to be pushing people to move. And what we'll see 100% is that finance model, just like what you said, it's the finance that will drive things. And we're going to see a huge shift in how do we as a country, but to be able to provide, say, electricity, green electricity, just in an affordable way, in a timely way. The amount of energy and money that's being spent in generating hydrogen. We're seeing all sorts of crazy things. The one, I know a lot of people got lots of different opinions about that. But so I think it's really important for us to dive into what you wanted to talk through. And I know that we will probably maximize our time today on speaking and asking questions. So can I ask you, Tim, are you comfortable that as you go through that you just have moments where maybe you pause and just get people's opinion around certain things? Because I think that as a whole, what you're talking about really touches people. And what I would like to at the end is also invite those who are going to be online and listening to this to maybe feed back to Maurice and the team. And maybe even we'll do a follow-up session answering other questions that this is going to generate for those that aren't going to be here. So Tim, I'd like to pass it over to you and just give people the moment here and there to ask some questions around the things you're talking about, because I know it's going to generate lots of thoughts and feelings and opinions and questions. So over to you.
Great. Well, before I do jump in, I'll do two things. One, I'll do a quick intro as to my current role, but before I do, I'll come back to your comment about Origin Energy. And in fact, the reason why I was almost late to this, I had a quick call from the Smart Energy Council, literally 2 minutes before I'm meant to be jumping online. And they said, "Oh, we've got a problem." And I go, "What is it?" And talking a little confidentially, but we're amongst friends, right?
Well, it's going to be online. We can remove it later if you want.
No, you don't need to. I'm half joking. It'll happen by the time you put this up anyway. AGL asked to join the Smart Energy Council's Electrify Everything conference that they're hosting in Parliament House next week.
That's awesome.
And so the Smart Energy Council rang me and said, "Oh, would you accept AGL?" And I'm giving them a shout out. This is how far AGL
awesome, right?
come in 1 year, that they wanted. And I had to say, "Oh, by the way, AGL is the largest retailer of gas in Australia," but they're there promoting the work that people like Dr. Saul Griffith have been promoting, Electrify Everything. We need to actually transition away from gas. We know the Cook Safe campaign is correct, that the idea that you're pumping methane gas into your house and it's causing asthma for your children, it's a carcinogenic, the health has been suppressed for a long time. So AGL used to market it, AGL, the natural gas company. And I was just looking at Clean Heat, Wesfarmers Clean Heat. I actually said to ASIC yesterday, they should actually make Wesfarmers change Clean Heat's name, because it's not clean energy. It's not clean heat. It's actually a carcinogenic. So that's how far AGL's actually come in the space of 1 year. Now, it's got a long way to go, but under the pressure that Mike Cannon-Brookes has exerted, and institutional and retail investors, AGL's gone from being our biggest carbon emitter, like 40 million tons of carbon dioxide pollution every year, and now they're proposing to shut their last coal-fired power plant in 2035. Now, they probably will be able to do it 3 years earlier than that. We're pressuring the board, but the fact that they're pushing an agenda like electrification of everything, I think shows, it's a huge shout out to them. Yeah. And you mentioned Origin Energy. I mean, you're probably well aware that Brookfield, a big Canadian renewable energy, one of the biggest renewable energy investors in the world, led by Mark Carney, the ex-Bank of England governor, the chair of the TCFD, the Task Force for Climate-Related Disclosure, he's bid $18 billion for Origin Energy. One of the key assets that Origin Energy owns is a 20% stake in Octopus Energy, which is Octopus is the number two retailer in the UK. And it is this amazingly disruptive retail energy technology platform that does exactly what you said, Vlad. It allows you to actually charge your car, charge your batteries. Every time the power price goes negative, they give their customers free electricity. That's the perfect opportunity to charge your car. And that's the way you actually get an increase in demand when demand's weak. You have a price signal, you motivate your customers. It's a massive, massive technology disruption, but it's really innovative and it's driving decarbonisation. And Origin Energy owns 20% of that technology platform globally. And then in Australia, they've got the rights. And for the last 3 years, they've been rolling that technology out. So their entire electricity and gas retailing system in Australia is now on the Octopus Energy platform.
And Tim, it's worth, just if you're calling out AGL, it's worth another call out around AGL, which is their Liddell site, Liddell and
Bayswater.
So they're turning that whole zone into, a circular economy zone. So, we've got, three projects we've pitched into there, something like to utilize that zone. And when we have the conversation with them, they're just so positive. They're just, they want it all to work. They want, if you're having something, how does that, help the other industries that are there, all of this decarbonization and circular economy push. I think that's an extraordinary play. Like they're going to be renowned for that. There will be people will talk about that, in the coming 5 or so years as all those sites transition from what they were, those massive power sites, to something completely different. So obviously the finances work.
This is amazing and so encouraging. It's awesome.
Go Tim. All right.
Yeah.
Let's do it. Let's jump into the presentation, or we're going to run out of time.
No, exactly. And so I'll share the presentation. Oh, Maurice, are you running the presentation or me?
You can share now. Sorry, had to just
great.
allow.
Just let me know if that's coming through clearly. Brilliant. Okay, so firstly, Climate Energy Finance is a public interest think tank. We're fully funded by Australian philanthropists. They have no say in the work we do. They're committed to decarbonisation and acting on the science at the speed required. So we have a small team of 5 people in Australia focused on decarbonisation. And what we're really doing, to Vlad's point again, is we work on the premise that finance will have to play a critical role in driving and delivering on the global energy transition. That you need the right policy framework, you need the right government policy framework, you need our corporates to actually be engaged and do the delivery, and you need finance to tell those corporates and provide the funding to do it at the speed and scale required. And the speed and scale is enormous. We know from the IPCC that the climate science is real, that extreme weather events are getting more extreme, more frequent all around the world. So we've got to act yesterday. But that means we need to move at a speed and a scale that's unprecedented. And when I work with finance, let me give you one number. There is $150 trillion, that's T, not B, trillion, $150 trillion of global finance capital has signed up to the Glasgow Finance Alliance for net zero emissions. And so they're all pledged to interim targets, 2030 targets. They've all pledged to driving progressive, accelerated decarbonisation in alignment with the science. And when $150 trillion of capital moves, then get out of the way. And I regularly cite Larry Fink, and you'll see him in my presentation. Larry Fink's the CEO of BlackRock. Now, BlackRock manages $9 trillion of assets. 9 trillion. Put that in perspective, CommBank is $1 trillion balance sheet. Larry Fink, BlackRock, manages 9 trillion, and BlackRock talks about the tectonic shift in global finance to dealing with climate. So when a $9 trillion giant says they're going to put their balance sheet to work to solving the problem, it gives us hope. And that's the key thing. We're not there yet. We've got a bloody long way to go. We've got a huge amount of work to be doing. But at last, Australia, under the new government, federally, in alignment with all the state governments, is actually working to unlock the massive opportunity in climate. So that's AIFA. We're a public interest think tank, and no conflicts of interest to declare. I'll just run through a couple of key things. I'll do this quickly, but as Vlad, as you said, or Anthony, just stick your hand up if you want to interject. I'd be delighted to answer questions. I think it'd be far more interesting than me just talking at you for the next half hour. So I'll talk about some key themes. I look globally because Australia plays on the global stage. We are a globally significant country, but we are also a very trade exposed country. So the opportunities and the threats to our economy come globally. But there's huge, huge momentum happening around the world. So I've actually gone into a bit of detail, point number 3, about the IRA, so the Inflation Reduction Act, the EU Net Zero Industry Act, India's PLI, the performance-linked incentives, South Korea, and even the GX roadmap in Japan. There's really amazing momentum happening in the last 6 months. And a lot of that, we can thank Putin. Putin's really woken everyone up to the critical issues of energy security, national security, supply chain security, and Australia will be a huge beneficiary of that. We will be a renewable energy and critical mineral superpower, as Professor Ross Gunnar has been saying for, 30 years. So moving on. This is a slide, I've been using a variation of this slide for a decade since I started working in the think tank space. I set up a Australian-based entity called the Institute of Energy Economics and Financial Analysis. Bit of a mouthful. I've just moved to a new group that I've set up last year. But the key theme is deflation. Now, deflation's the opposite of what we're all seeing right now. We are seeing rampant double-digit energy price inflation. We can all look forward to a 20% increase in electricity bills on the 1st of July, 2023. Unless you're in Victoria, then you can have a 30% increase in your electricity bill. That is multiples of the general inflation rate because of the rampant oil, gas, and coal price rises. So in contrast to that, we have seen a decade of declining prices, deflation in wind, in solar, in batteries, in electric vehicles, and that trend will continue. I am forecasting that solar module prices will drop 10% annually this year, next year, and every year for the next decade. So it's dropped more than 10% per annum for the last decade, other than the last 2 years. And it will return to a deflationary trend for another decade, which means solar power will be virtually free when it's sunny, literally in Australia every single day, predictably. I'll stop there.
Tim, can I ask you, where do you see, and if you feel this is a too big a topic, just say so, we won't include it in, but where do you see nuclear in the mix of the conversation?
Yeah, I'm going to be blunt. I see nuclear as a deliberate red herring by the National Party of Australia. It's designed to distract us from the issue. At the end of the day, they know, even if we were to commit to building a nuclear power plant, they know it won't be operating for another 20 years in Australia. Now, we have a climate emergency. We need to deal with the science this decade. So irrespective of what you think about nuclear waste or nuclear disasters, and I'll mention there, and you can hear the skepticism, I hope, in my voice, the TEPCO Fukushima nuclear disaster, and I'm naming TEPCO, it was their incompetence that caused the Fukushima disaster. It wasn't a freak wave. They did not plan for large waves, just incompetence. Anyway, put that aside. It cost the Japanese people $200 billion. $200 billion of cleanup costs. There is not a private company in the world that can build a nuclear power plant because they can't face the extreme risk of $200 billion cleanup costs if something goes wrong, and you can't get insurance for nuclear. So that is a financial reason for why I am not in favor of nuclear. But in Australia, it's irrelevant other than it's a red herring. We will not build nuclear because we can't wait 20 years before the first unit of nuclear production is generated in Australia. We have to solve for the science today. Now, there are other reasons, and the duck curve is an issue. Like, in other words, whenever it's going to be sunny, the power price in Australia will be negative. What are you going to do? You're going to turn the nuclear power plant off for 30% of every single day, because you're not going to sell electricity for a loss, and that's what the Australian electricity market would require. So nuclear has a real role in Japan, in Korea, in America, in France, in Russia, in China. A real role, because they have the technology, they have it in operations, and it's a climate crisis. We need to use every zero emissions technology you've got. But if you're starting from not even scratch, then we don't even have nuclear engineers in Australia. We'd have to import them all, probably from China or Russia, because there aren't any nuclear engineers in Australia who've actually built a nuclear power plant. So it's all going to be imported technology. And yeah, deep dive, I think nuclear is an absolute red herring. It's actually promoted by the IPA, the Institute of Public Affairs. They deliberately do that because they're sponsored by the fossil fuel industry, and they want to disrupt discussion, and they want to sow discord, in my view, so that they can keep promoting fossil fuels. Because in the meantime, for the 20 years we build the nuclear power plant, we have to keep running on fossil fuels. Whereas you build a solar project and a battery project, it'll be operating next year, and it'll be pumping out 19 years of zero emissions energy at really low cost.
Right. No, thanks, Tim. Really appreciate it. Thanks for doing a little side note, because it's a question that comes up all the time. Sometimes it does feel like a red herring, and sometimes it does feel like, why is no one talking about it? So thank you. I appreciate it.
Yeah, no, you're right. It comes up all the time, and it's a very relevant debate in Europe. It's a real debate in Japan. And I mean, the Chinese aren't debating. They're building massive, massive nuclear power plants right now because they're doing everything that they can to drive decarbonisation. But we just don't have the technology, and we don't have a 20-year window to wait.
Cool.
So first theme, the most powerful theme, and one that finance is really picking up on, is the ongoing deflation. And let me just stress, when I talk about solar being disruptive, once built, solar has a zero marginal cost of production. Sorry, Krista, you had a question?
I did. I'm sorry, Tim, to take your train of thought. And this was off the back of Lad's question. What about synthetic fuels? Where's your view on synthetic fuels?
Yeah, that's a whole range of technologies. I'll deal with one. We've heard Exxon promote bioalgae for the last, now this is only one little technology, but let me just use it as an example of why we've got to stick with the main game. So for the last 5 years, every annual report from Exxon has trumpeted the fact that they're investing $350 million. That's serious money. They invested $350 million in 5 years in bioalgae, and last month they cancelled the investment program. Now, I'm throwing that out there, and I reckon it's the absolute evidence of greenwash. For 5 years, they knew it was not commercially viable, and they needed to point to a solution that was nice and green and they could stick on their annual report. And they were happy to pump $350 million over 5 years. So what, $70 million a year or whatever, into a technology they didn't believe would be disruptive. The CEO of the company that they literally just pulled all their funding from came out last month, and I can send you the article if you want, but he's bitching about the fact he's made an enormous breakthrough. They've increased the productivity of bioalgae by 700% in the last 5 years, and they're halfway to commercialization. He said 5 years ago, we had to get a 15x improvement in efficiency to make bioalgae work. And 5 years later, we've done 7x increase in efficiency. And when we reported that to Exxon, they pulled our funding. In other words, it's actually halfway to fruition, and Exxon doesn't want it to work because it disrupts their business model. They want to just keep polluting oil and gas. So there you go. That's you have to be really careful of who's telling the story and what is their motive. And I would call that out. And so I'm also very wary of biodiesel because, and we've done some studies on this in India, the water intensity, the land intensity of growing replacing food crops with energy crops, massive, massive, massive water intensity and massive land issues. So in countries like India, they have trouble feeding their 1.5 billion people, and yet the government's looking to mandate 10, 15, 20% biodiesel blending requirements. They don't have the land or the water. Half of India is already in water stress, and the government's encouraging something. It's ridiculous. The numbers are like 100 litres of water is required to make 1 litre of biodiesel. It's just criminal. And again, it's a con on the poor people of the world.
Thanks, Tim.
Right. I'll risk getting to slide 3. Okay. Second point. I am really bullish about the safeguard mechanism. Unlike a lot of environmentalists, it's going through Parliament, we hope, today in the lower house, on Monday in the upper house. Fingers crossed. But why am I mentioning that? And it all comes down to my role. My philosophy is that the finance markets globally can solve the climate science in the speed needed, that the scientists tell us is needed, if they have the right price signals and the right policy framework. You can't deal with carbon pollution if you don't have a price on the externality. You have to internalize the cost of the pollution to make the companies deal with the problem. And it's amazing what the companies will find is technologically viable once they have a price on carbon. Now, in Europe, there is no debate. The price on carbon is almost 100 euros a tonne. You want to pollute? Fine, but you're going to pay the price. The price has gone up 5-10-fold in the last 5-10 years, and it's clear it's going up, and it's regulated, and it's accepted wisdom. Now, so what does the biggest steel company and the biggest cement company in Europe talk about? They want to make sure all of their international competitors have the same impost that they have, because they know they can't get rid of their own impost. They want a carbon border adjustment mechanism so that everyone else has to play by the same rules they have to play by. Now, that to me is great. They are advocating for the expansion of the emissions trading scheme in Europe because they want it inflicted on all their international competitors because they have to face it. Now, it was amazing to hear a Republican senator in America call for a carbon border adjustment mechanism in America. Like, that is unbelievable. I mean, the Republicans have been denying the climate science for as long as they've been taking donations from Exxon and Chevron. And now all of a sudden they want to protect domestic American industry from those horrible people in China that are polluting.
That's it.
They forget that America's pollution is worse than China. Our carbon emissions are worse than China almost. But anyway, put that aside. I don't care whatever their motive is. If they're there to protect American industry and they want to put a carbon border adjustment mechanism, that is great because it means the world's moving to a price on carbon that is high and effective at dealing with the problem. Finance can only deal with the problem when there is a decent price on carbon. And so I'm actually getting really excited. That's why I like the safeguard mechanism. It's all about putting effectively a price on carbon back into Australian heavy industry, where carbon pricing in Australia became politically toxic because of the climate wars we saw, which I would slate down to the fossil fuel industry donating to our politicians. I'll note that the Teals and the Greens don't accept any fossil fuel donations. And I think we should ban that in all of our parties. It's a bit like having the property developers or the gaming sector owning the New South Wales government. Oh.
Yeah, I just had a question for you, or a comment for you, Tim. I think this is exactly on point to what, as we've gotten on these calls, we were already, a year and a half, Anthony, right, of having these conversations. And every time there's always a moment, if you look back at all the videos recorded, there's one thing that always stands out, and this says it exactly. It doesn't matter almost whether you believe in the science or not. If change is going to happen, we must make the numbers work. So a single-use project is what we, love to coin as, it doesn't always work. One thing, doing just an algae project may not be the thing that does makes the numbers work and makes the impact. But having that with a few other projects together, where there's a big shift, whether it be on country level or state level or just in the local area, whether it be a renewable energy zone, whatever it might be, the numbers have to work. Then it doesn't matter if your science, if you believe in the science or not. There's enough of a shift. I mean, I know it does, but there's a shift, and if you want to make the shift happen, you've got to make the numbers work. Hence why you're seeing these people, the guys in the US, the politicians saying we must have everybody have a price on carbon, not because they believe, but it's because they go, hold on a minute, we've got jobs, everyone should be the same. And so this is a great example. Thank you, Tim.
No, absolutely. And I mean, it's a bit like the response we've heard from the National Party. I'll dump on them because they don't accept or act on the climate science. They don't act for the farmers of Australia. They act, as Matt Canavan says, farmers only represent 6% of the National Party voting base. So why would they worry about the farmers? I think our farmers can be globally significant contributors to solving the climate crisis. So I spent Tuesday in Melbourne Tuesday or Wednesday talking to a whole lot of Australian technology startups, where they're looking at solutions where farming, where agriculture, where forestry can be a major contributor to solving the methane and carbon emissions issues in Australia. And again, the safeguard mechanism creates the price that then drives the uptake of those technologies. So there are some amazing new innovations, and that's where I think in 2023, the conversation in Australia is changing dramatically, and it's changing permanently because all of a sudden we're now talking about the massive opportunities for Australia, not the threat to Australia from our incumbent fossil fuel producers. They're under threat. We're not talking about the 20,000 coal mining jobs that we're going to lose. We will lose those jobs. But now all of a sudden, I'm able to stay here in front of this audience, in any audience. We need those 20,000 coal mining workers. Why? Because the biggest shortage in Australia is mining workers for lithium and for graphite and for rare earth. We need every one of those coal mining workers to be reskilled into lithium miners, because Australia exports half the world's lithium, and it's growing and it's doubling and doubling and doubling again this decade, the demand for lithium. So Australia's in the box seat. So all of a sudden we don't have the worker backlash, the union backlash, and the political backlash against the transition risk anywhere near what we did.
Tim, Julie has a question. Yeah.
Oh, just what's the status, Tim, of the safeguard mechanism at the moment in Australia?
Yeah, it's literally, it's meant to have been tabled yesterday or today in the lower house. You might be aware Parliament, federal Parliament rises at the end of next week and then doesn't sit again till after the budget. So there are 4 bits of new legislation that the ALP is trying to rush through this week and next week. One of them is the safeguard mechanism. So they're hoping it gets through today I'm hoping it gets through in the lower house today, and then that it goes to the upper house early next week. So we could exit next week with the safeguard mechanism legislated in place, but there are some crucial amendments required. It's good, but it could be 5 times better with a couple of minor tweaks to make it effective. Like, I think Adam Bandt's in a really difficult position. He's trying to say a basic rule. Look, if we're trying to reduce emissions, let's make sure the safeguard mechanism actually requires a reduction in emissions. Like, he's actually talking logic. There's no point allowing new legislation that allows an increase in emissions. And he's dead right. As we talked about earlier, if new projects come into Australia, emissions in these major emitting facilities in aggregate could go up over the next 7 years, as they've been going up over the last decade. So much as the Greens are being very aggressive, they're actually trying to make the legislation credible. And the Teals are trying to get some sort of middle of the road changes through that will enhance it. But as I keep saying in all of my work on the safeguard mechanism, we need momentum, not perfection. We can always enhance it later, but we've got to get it through. We need a price on carbon. So coming back to my presentation, a price on carbon in Australia is critically important. We've got it in Europe. We've got it in China. Japan's just announced they're going to phase in a national ETS starting 2026. And President Biden, to his credit, brought in a price on methane of $1,500 a ton for excessive methane emissions in the IRA. So he brought in one tax. Most of the IRA is carrot. There's one stick, and that stick is about methane. And I can come back to that if we have any time left. The third point about why I'm bullish about finance moving, and at the end of the day, much as I mentioned, Larry Fink has had his road to Damascus moment, and BlackRock 2 or 3 years ago came out very publicly, accepted the science of climate change, and more importantly, said that they would do something about it. And it comes back to this: the green line is next era energy. It's the biggest utility in America. The purple line is the US stock market, the S&P 500, and the black line is Exxon, the biggest American oil and gas company. So you can see over a decade basis, Next Era Energy, the biggest investor in renewable energy in the world, so not in America, in the world, they will invest $15 billion US, one company, $15 billion in this year alone on renewable energy and grid firming technologies and grid transmission. Exxon, the biggest investor in fossil fuels in America, and Exxon has massively, consistently underperformed the market, except if you just look at the last 18 months, obviously with oil and gas prices going through the roof, they've had a big rebound, but BlackRock invests for decades. They don't invest for a weekly or a monthly or an annual trade. At the end of the day, they do both, but their objective is to invest for the long term. And so when you see the consistent outperformance of the biggest investor in renewable energy in the world and the consistent underperformance of the biggest fossil fuel company in America, you can see why BlackRock's willing to vote with its feet on the climate science. So the next slide is just putting a few numbers in on global investment trends. Last year, there was $1.1 trillion invested in global clean tech investments in the year. So a big rise, and it's the first time the investments in fossil fuels were equaled by zero emissions technology. So we're moving, we're just not moving fast enough. But 15 years ago, I was talking to one of our biggest fund managers, asset owners in Australia, and they said, oh, solar is a cottage industry, it's insignificant. Well, solar in 2022 was 5 times bigger than the coal industry globally. The amount of money going into new solar was 5 times bigger than the coal industry. It was also 5 times bigger than the gas industry, and it was 5 times bigger than the nuclear industry. And it's growing at, I don't know, 20, 30, 40, 50% year on year, whereas you can see the others are actually flatlining or declining. And wind, likewise, is a $150 billion a year industry. So there's a lot of money moving. We're way beyond the idea that these are small players. We hear a lot about fossil fuels in Australia because we're the 3rd largest fossil fuel exporter in the world. But let's not be blind to the fact that China installed 78 gigawatts of solar in just 1 year. Glad.
Tim, I was going to say that, and we're seeing funds that are, looking at solar specifically and are are working with large property developers and so forth, where, they've got a pipeline of, in the billions for only doing one thing, and that's rolling out solar across all of those properties. We were speaking with one fund that's rolling out $200 million or 250 or whatever it is of just that thing. They're doing the one thing and one thing only, rolling out the solar onto the properties, and they know that over the next 2 or 3 years, their actual budget, this one fund, is $2 billion, and that is a drop in the ocean of all of the properties that are going to be doing that. Like the numbers in solar are going to skyrocket. And one of the projects that James, who's had to drop off the call, that James McGregor is working on actively is how do we recycle them as they come off? But even now, as we talk to where the money is in solar PV, it's all about getting it out there and setting it up, because there's this massive wave of demand coming that's so big with electric vehicles and all electrification of everything that it's going to be needed. So yeah, so this, yeah, I wonder, can't wait to see what this looks like in the next, every year that's going to look completely different, which is extraordinary.
Robert, do you want to jump in?
Yes, Tim, sorry, do you have any concerns that with the IRA passing in America and so forth, that global finance is going to be soaked up by those initiatives, and which will hamper us becoming the superpower that we promised to be?
Robert, it's an absolutely key question, and you will be pleased to know the federal government, the entire cabinet, is working on exactly that question. I know that you might be aware Dr. Alan Finkel did write, a team with Dr. Finkel wrote a report for the Australian federal government, which was what is Australia's response to the IRA, to the Inflation Reduction Act, because we have to have one. Everyone else is having a response. And if Australia doesn't respond, if we just leave it to the free market, we will lose. And I've got a couple of slides to that point, so I'll come back to it. But Australia has to respond or we will lose. I 100% agree with you. The great news is, and you have a read of the Fin Review today, there's a big article about Jim Chalmers, the Treasurer of Australia. He's got his budget coming, his second budget coming in May, and 50 days from now or something. And he said, look, the energy transition is happening. It's global. It's driving way, way faster than anyone thought. And a sustainable Australian growth story, economic growth story, means embracing with both hands the energy transition. So the good news is Chalmers is aware of it, Bowen's aware of it, Albanese is aware of it, all of our state governments are aware of it, and they're yet to actually signify what it is. But maybe in the way you asked that question, we are seeing a massive crowding in of finance in America, and I will come back to that. There is a risk that we lose out, and that's exactly what Twiggy Forrest is saying. That's exactly what Woodside's saying. But I will leave you with the point, and I'll come back to it. Finance is unlimited. Where there's really good opportunities, more money than you can poke a stick at around the world. So if we create the right opportunities, we'll get that money. If we don't create the right policy framework, that money will go to America. And I do brief some of the biggest asset owners in Australia, and that's exactly what they're worrying about. How do we get the right policy framework to crowd in private capital at the speed and scale, and with the right policy framework in Australia, when you're competing against massive government subsidies in America, Europe, Japan, and China? And it's a serious question. We need a serious, considered response. But my advocacy to the federal government and to anyone that's listening is we can't just match America dollar for dollar. We are not a big enough country. We've already got $1 trillion of debt. We have a $3.3 trillion private pension system. We need to create the right public framing and the right public policy and the right public investments to encourage that $3.3 trillion of private capital, that this is the place they want to invest to make money in. And so we've got to crowd in private capital. That's how we will respond at the scale Australia can respond at. So that's what the government, I'm happy to say, I think our federal government is really, really engaged on this question. They haven't got the solution because it's not obvious how you compete with $800 billion of subsidies by the American government, but we have to. But the good news is it's a great opportunity for Australia. I'm probably going to have to speed up, but just at one point, when people, you've heard me talk about China and in the positive, I do this deliberately just to push back on the bullshit from the Murdoch media. China electric vehicle sales grew 94% year on year last year. 27.8% of all passenger vehicle sales in China last year were electric vehicles and plug-in hybrids, 27.8%. The idea that this EV revolution is going to impact next decade is just crap. It's happening now. And BYD, the biggest electric vehicle manufacturer in the world, in May last year, announced with immediate effect they were closing their last internal combustion engine factory. Why? Because they needed all the workers and they needed the facility because they couldn't keep up with the 300% year-on-year demand growth that they were experiencing. So they didn't talk about shutting down internal combustion engine factories in a decade's time. They did it. They announced it on the day they shut the factory, and the next month their internal combustion engine sales, they report them monthly, it's all available in public real time, was zero. Like this, I mean, that's where Scott Morrison was just brain dead. He just totally underestimated the speed of disruption that China is driving in the world. The other thing, the red, I think, is a really good choice of colors here by the IEA. Red is China. To me, this is what Putin's done. He's reminded the world, particularly the West, that we can't afford to allow China to absolutely dominate global supply chains on critical minerals and critical manufacturing, that we need diversity of global supply. Diversity is good in many different ways. Reliance on one supplier, whether they're Australia, America, or China, is not healthy. And so when China dominates the solar manufacturing, the polysilicon manufacturing, the copper and aluminium, the nickel, the electrolyzer manufacturing, you need diversity of supply. Now, the great news is, and I'll get to the punchline, which it will probably run out of time. The punchline is Australia is in the box seat to be the second alternative supplier to the world on half of these opportunities. We are the world's #1 in lithium. We're in the top 5 in copper, cobalt, nickel, vanadium, graphite, you name it. That's the opportunity for Australia.
Tim, most of the reprocessing of these minerals is hideously polluting, and China's prepared to pollute because they can control the narrative. In Australia, that we talk about, reprocessing our own stuff. Do you think that's going to be an issue politically and environmentally within the Australian electorate?
Robert, it's an absolutely key point. And so when I say Australia can get access to the finance, and I point to our private super, I'm not talking about Chalmers telling the super to invest. I'm not talking about changing from a market economy to a socialist economy. I'm talking about creating the right political framing and the right incentive to allow and encourage private investment, because the risk return profile is exciting. Now, what I'm getting at there is I've called, and I preface that comment about I feel like a socialist when I say this, so I have to give that premise. I've worked in financial markets. I worked for the biggest financial institution in the world for 20 years. I am a capitalist. I know the power of finance and capitalism, but you need, to your point, Robert, you need the right political framing. You need a national interest objective alongside the risk return finance objective. So I'm calling on things like the Clean Energy Finance Corporation, the Future Fund, NAIF, the Export Finance Australia, Snowy Hydro, you name it, any of these big financial institutions that the federal government owns. I'm suggesting that Chalmers needs to tap their capacity, their governance, their expertise, their established framework. And you might have seen the Clean Energy Finance balance sheet has been expanded from $10 billion to $30 billion back in October, because they've been asked to deploy $19 billion of rewiring the nation capital. In other words, give it to an outsourced financial institution with good corporate governance and real experts, real finance experts. Don't leave it to our bureaucrats to implement a $20 billion investment program. They'll screw it up. Give the money to professionals, but give those professionals a national interest mandate. And to Robert, to your point, that mandate must be, they must apply absolute world best practice on ESG, environmental, social, and governance. They must deploy renewable energy at scale. So there's no point building 3 of the world's 3 largest lithium hydroxide refineries in Western Australia and yet they don't even have a single unit of renewable energy power going into them, right? It's just illogical. Why build the biggest new refinery in the world and then not power it with zero emissions energy? Surely you want to actually decarbonize. And then we need, as you said, refineries are really dirty. They make mining look good. That's pretty hard to make mining look good, but refineries have to be done properly. Now, I would bank on Tomago being one of the world's best refineries in 10 years' time. Rio's going to spend $1 billion retrofitting and modernizing that refinery. There'll be 1,000 really high-value unionized jobs up at Tomago in a decade's time, just like there are today, but they'll be running on 100% renewable energy, and they'll be major sources of demand response management to actually provide reduced electricity demand whenever we have a cloud go across the sun or whatever. In other words, how do you manage the intermittency of massive high penetration of renewable energy? Tomago, the refinery, can play a critical enabling role of 100% renewable energy in our grid this decade or by 2035. So we need the refineries to have a national interest mandate. Now, Tomago, Rio has to be paid for that service to the grid. We have to have the right system. So that's what I mean. There has to be a national interest objective. So if I have one ask of Chalmers, if I had 5 minutes with him, I'd tell him to give the Future Fund a $20 billion equity mandate and give it a national interest objective to invest in all of the things to do with decarbonisation and critical minerals and critical metals, drive decarbonisation as part of it, and crowd in a whole lot of private capital. Because if the Future Fund deploys $20 billion of equity, patient public interest equity, it will probably crowd in $100 billion of private equity, and then you'll crowd in $100 billion of private debt, and all of a sudden we'll have $200 billion of capital going into the system at the speed. And that then allows us to compete with the US IRA, which comes back to your question earlier. Anthony.
Yeah.
Quick question. You mentioned if you had 5 minutes with the Treasurer, if you tried to contact the Treasurer, would he take your call?
Not in the next 6 weeks because he's busy writing the budget, but he's got our message. I haven't directly talked to him since he was elected Treasurer. I work at distance from the government because at the end of the day, we are an independent think tank, and there are plenty of ways you can get the message across. But yeah, there is a big Electrify Everything conference that the Smart Energy Council is having in Canberra in a couple of work days' time. We work closely with them. But yeah, at the end of the day, I think the government's very aware of what we're saying, and they're very aware of what a whole lot of groups like us are saying. But I did brief the single biggest financial institution, private financial institution in Australia last week, the whole board 2 weeks ago. And we spent 3 hours talking about how do they galvanise their $240 billion of private capital at the speed and scale needed, where they can get an acceptable risk return for their members, because they have a sole purpose test. The fiduciary duty of every one of those directors is to maximise the long-term risk-adjusted returns. And so I went through this same discussion that we're having with them. They want to move, they want to deploy capital at scale, they need the government to set the right framework. So I think when they talk to the government, and they do talk to the government, they'll probably get the message across more clearly than I will. And I'd probably be conflicted because I'd be bashing Chalmers for 10 minutes because I'd want 5 minutes to talk about why he has to reform the multinational tax situation in Australia, because he needs the 10, 20, 30, 40, $50 billion a year of corporate tax those guys should be paying in our country, because he needs to help protect the poorest people in our country from the rampant hyperinflation of fossil fuels. So I'd probably get carried away on tax reform.
Understand. I asked the question, Tim, because one of the things that we found we are very good at doing via the whole community that is Symphony 7 is connecting people with the people they need to meet in order to make magical and brilliant things happen. Having heard, and your presentation's not even finished, but from what I've seen, this is one of the most positive and encouraging presentation discussions I've seen in 10 years. And my sense is if Chalmers had 15 minutes with you before he announces the budget, our country and every person inside of it could benefit. So perhaps let's take that chat offline. There are a couple of people. It sounds like you're saying he knows what he needs to know in order to make the right decisions. But even if it's beyond the budget, let's perhaps have an offline conversation. I'd love to see how some of the things that you're putting forward here can take hold. I mean, wow, I'm not sure what else to say.
No, thank you. No, I'd be happy if you've got connections. I'm happy to use them. That's partly why when Maurice approached me, I'm happy to talk to anyone that's willing to accept and act on the science of climate change. It's a critical opportunity for our country. And I think the narrative is changing literally every day. But yeah, if you've got connections, I'm more than happy to pursue them. And yeah, we are getting the message through indirectly, and but happy to do it direct if you've got some connections. Happy to have that 15 minutes. It's amazing what you can get across in time.
100%. And we believe that you and everyone in this room can actually connect with anyone that we want to, if we've got a reason for doing so and a good approach. We've seen it many times. It's completely doable.
Yeah, partly why I do a lot of even just public presentations is all of these communities, they all have the right to vote, and they all have the right to talk to their local member. Now, my local member is Paul Fletcher. I've tried to meet with him. I've met with him once. I then met with his 20-year-old associate, like literally his intern. And he said, oh, yeah, I'll definitely give Paul your message. I go, I live in Paul's electorate. I've got people working in your electorate on this issue, and some of them won't listen. So you've actually got to then ask them publicly. You've got to support their alternatives. So I will work with any politician of any color who accepts the any like green, blue, teal, whatever, red, anyone who accepts and acts on the science of climate change. But I'm calling Paul out because he says he accepts the science of climate change, then votes with Matt Canavan and Barnaby Joyce with every time he votes. So at the end of the day, he's bought and paid for by the political establishment he works for.
And he doesn't take a meeting with you.
He doesn't bother anymore, no. He sends his 20-year-old intern in.
Put your energies elsewhere, Tim.
No, exactly, I do. I don't even bother anymore. You're right. Although I work with Nicolette Buller, who is standing against Paul Fletcher and who got the biggest swing in any seat in the last federal election from a standing start. So I'm hoping Nick Buller will be the next member for Bradfield in our federal government. And so we'll have solved the problem. As you said, Julie, you can't convince them, then get rid of them and put someone in who actually wants to act for our community.
Yep, nicely said.
Cool. So we've already gone through the IRA, but I think, Anthony, as you sort of mentioned, the amount of capital moving is unbelievable. This is a US chart on the left, which is the interconnector queue in the US for new generation capacity. So what that is, if you want to go and build a new project, a new electricity plant in America, it's not the constraint of building the plant that's the problem. It's the constraint of being able to actually connect to the grid. So the best guide as to what's coming through in the pipeline, investor pipeline, is who's actually got a project and approached the grid operator for access to connect to the grid. So you can see here, 1.4 thousand gigawatts of new projects are queued up, ready to be built over the next 3, 4, 5 years in America. That's $2 trillion of new capital projects queued up. Now, not all of them will be built, a bit like not all of the 100+ fossil fuel projects in Australia will be built, but I'd actually argue a lot of these will be. 674 gigawatts of solar is in the investor queue, 426 gigawatts of storage is in the investor queue. And let me just put that 426 gigs in context. America was the world's largest installer of batteries in the world last year. They did 5 gigs. And so there's 80 times as many batteries in the investor queue as were installed last year, where last year was double the year before that, and so on. You get the point. The market, the finance is moving. They just want the right policy framework, and they will invest at an unprecedented scale. Now, Now, what we're also seeing is and this was what makes me really excited. We are finally, belatedly, probably a decade later than we should have, but we're starting to see a global technology investment race, a space race. And so the EU 2 weeks ago announced that they're bringing in the Net Zero Industry Act to 2023. In other words, they were bitching about President Biden dragging too much capital going into like VW in Europe had committed to building massive new electric vehicle and battery factories in Europe, and they actually announced that they were going to transfer a $16 billion facility to America to tap into the IRA. And so Europe was on one hand saying to Biden, you've got to give Europe access to the American subsidies because we're losing too many investments to your country, which was exactly what Biden's trying to do. And then on the other hand, they said, well, you can't beat him, so let's actually just join him. And they've doubled down on their investment policy subsidy framework approach to modernize European legislation and double down on driving decarbonisation across Europe. Now, it's not just Europe. Prime Minister Modi in India has launched a massive new manufacturing scheme. Now, a lot of this won't happen because unlike America, unlike China, unlike Europe, Modi doesn't have a lot of money to spend. He's running an enormous country, a very powerful country, but it is a very poor country. So Modi doesn't have the luxury of throwing $800 billion of subsidies on the table. So he's trying to encourage the right framework to encourage Indian solar module manufacturing so that India can compete with China. Now, Korea, likewise, Korea is our third largest trade partner. Korea has announced a massive, massive investment scheme, only in the last couple of months, talking about a massive investment scheme. $30 billion is going into a battery hub, one battery hub led by POSCO, in order to provide all the batteries and EVs for America as America is demanding in the IRA. So America has said, if you're a free trade agreement partner of America, you have access to the IRA. Now, Australia is part of the American Free Trade Agreement, so is Korea, but Korea's then realized, POSCO and the battery companies in Korea have realized they are critically dependent on Chinese supply chains. And the IRA is all about breaking the nexus of American industry reliance on Chinese supply chains. So Korea is all of a sudden having to build massive new battery cathode, battery anode, lithium hydroxide factories at world scale and world speed in order to reduce their reliance on China so that they can tap into the IRA. Now, I'll just join the dots here for you. The chairman of POSCO met with Prime Minister Albanese in October last year and came out and announced he wanted to deploy $40 billion of capital into Australian battery supply chains. Right? The biggest company in this area in Korea, and he's doing deals with the Australian federal government saying we need alternative critical minerals and battery supply chains independent of China. Australia is the obvious partner. POSCO is a massive player in Australia. I've chatted to the Australian CEO of POSCO and I said to him, oh yeah, you keep investing in coking coal and thermal coal and LNG. What are you doing in critical minerals? He goes, oh yeah, we're a big investor in lithium, in Lynas rare earths. And we've only just started. We are going to deploy that $40 billion and Australia can have a big chunk of it. It's his job as the country manager for Australia to get as much of that deployed here as he can. And some of Australia's big lithium companies, one of them is building a lithium hydroxide factory in Korea as we speak. So it is moving, but again, countries like Korea is the 12th largest economy in the world. It's third largest trade partner to Australia, and they're moving at speed because they see the massive opportunity. And then the last one is Japan, Australia's largest fossil fuel buyer, and they've announced a massive, massive $20 trillion government support scheme to decarbonize heavy industry in Japan. They announced that in December last year. You wouldn't even have read of it in the Australian press, and yet Japan is our single largest buyer of LNG, coking coal, and thermal coal in the world, and they're committing to decarbonisation. So hence why I've lambasted the Murdoch media. We need media reform as well as democratic reform, because we need to know what our key trade partners are doing, and they're moving at huge speed because they see this as a global investment and technology race. I might, unless I've been through actually a lot of this. We've put out a major report, which is called a critical mineral value adding superpower. We're riffing off what Ross Garnaut's been saying for a long time. We do work indirectly with Ross Garnaut. We agree with him. And the opportunities in critical minerals are just as big as they are in renewables, if not more important. Critical minerals and critical metals. And I say that the AFR today has 2 different articles on Fortescue, and it mentions how Fortescue's just made a massive, massive technology breakthrough in green iron. And they've taken 1 year to do it. So Twiggy's got a lot of attack in the Australian press for being too I'll get that word wrong. Too evangelistic. Thank you. Yeah, he's drunk in the Kool-Aid. I would argue he bathes in it every morning. And he's a billionaire, and so he can be a bit divisive, but he is spending $600 million a year on research, development, and deployment to drive decarbonisation technology. So what they've just announced is a potential world-leading breakthrough in how to transform iron ore into green iron. In other words, how do we actually reduce the waste material? So every time we send a ton of iron ore to Japan, Korea, or China, 40% of it is waste material. We can remove that waste by exporting iron rather than iron ore. And that way we're not competing with our customers. We're helping our customers in Korea, Japan, and China decarbonize their steel industry. And Twiggy's just made a breakthrough on that technology, or Twiggy's scientists. And it's in the Fin Review today. Now, it's still years away from commercialization, but when Twiggy sets an agenda, he generally delivers on it. He's very divisive, he's very controversial, but he's throwing huge amounts of money in it. He's trying to change the debate in Australia, and at the end of the day, demonstrating by doing. So I'm pretty optimistic that we actually wrote this report and submitted it to the federal government a couple of months ago at a request from the Department of Industry. And then we've been using it to try and just change the debate and refocus people on the massive opportunity in Australia. You can't read it, but there's a list of some of the programs that the Albanese government's already announced. And you've heard of the National Reconstruction Fund. It's a $15 billion fund. Okay, we need that. 3 billion of that's going to critical minerals, but we need 15 billion, and then we need it probably done 5 times over. We need probably $100 billion of different public interest investments in order to galvanize the 300, 400, 500 billion of private capital that's needed.
I was going to just mention, Tim, as well. So, you touched on Japan and their large-scale investment, and we've seen a number of them have conversations around coking coal and other coking coal replacement. And obviously hydrogen is one of those massive conversations. But we're also seeing a large investment in waste and what waste can do in a process to have, like that synthetic coking coal before the hydrogen revolution. So there's got to be a step in between. And the reason why I just wanted to touch on that is, as part of this journey, it's not an all or nothing. Like, when you look at the conversations with Twiggy, it's so big. We've been to the conferences, and in May, the All Energy Conference is happening again in Sydney. Twiggy was amazing last year. It's like going, we're just doing it. And other people are going, hold on, we're doing it too, but not at that scale. There is a transition piece that I worry gets lost with the investors. And I just wondered if you can just maybe touch on that, is that there's some in-between stages, such as, before you remove diesel and go to hydrogen cells, maybe there's an in-between stage. Maybe there is a stage where, as we build out the green steel, maybe there's another color steel, which replaces coking coal with some other resources that would go to landfill, such as a synthetic coking coal, which we see at New South Wales is an amazing project. So I'm just wondering, what's your feeling around those, the kind of the investing also in, or with the investment interest in the in-between stages before we get to the gold standard?
Yeah, it's an important question, and there's no definitive answer here. But at the end of the day, there is no silver bullet. We need all the technologies. We need those that are commercially deployable today, and we need some new technologies. But I have read Bill Gates's book, and I disagree with a lot of what he says, because what he's saying is breakthrough ventures. We need massive technology breakthroughs. We don't have the technology today. Well, no, that's not correct. We do have the technology today. There are a whole lot of new technologies that we'll have tomorrow. But in the meantime, there are a whole lot of commercially viable technologies today that just need the right platform. And so he really oversells the need for breakthrough technologies, because he's all there for, he loves SMRs.
Right? Yeah, that's right.
Right. But SMRs won't be built commercial. Like the irony is SMR technology, the only approved SMR in the Western world was actually had its approval rejected last year. It was approved by the DOE, Department of Energy in America, and then it got rejected when they put in an update, because the only source of enhanced uranium fuel that they could use came from Russia. And so there's no way America was going to invest billions building a SMR that was reliant on one type of enhanced uranium, which only came from Russia. And so they actually rejected their approval. So they're back to the drawing board. But anyway, so getting to your point, there are a whole range of technologies. There are going to be some breakthroughs needed. We need the right policy framework. So let me give you an example of that in steel. I am all for electric arc furnaces, and we need to gradually phase out blast furnaces. Electric arc furnaces run on electricity, blast furnaces run on coking coal. Now, at the end of the day, you need a price on carbon emissions to level the playing field. And so BlueScope says, oh, we want to build a new blast furnace. We want to spend $1 billion in the next 3 years building Australia's last blast furnace. When I'm going, no, build an electric arc furnace, be part of the solution, not part of the problem. And they go, but we can pollute for the next 20 years for free. Why? Our carbon pollution. So of course we're going to do the cheaper option. Yep. But you create a safeguard mechanism. And then Tomago yesterday, the Rio's going, oh, we want to reduce our emissions at Tomago by 2% per annum because we're an export trade industry. And like, we didn't know about the climate science until this week. That's the CEO of Rio Australia. I mean, she didn't quite say that, but she's going, oh, we need massive, massive government subsidies, right? Because we didn't know about the science and we didn't actually want to invest in the science for our own good. But now you're going to put a policy framework on us. Anyway, I just got a bit annoyed when I see her. She's been a big sponsor of Albanese, but she's turned around and said, no, I want you guys to help fund Rio. Like, one of the most profitable mining companies in the world needs more taxpayer subsidies. Yep. And no, you guys could actually invest in the solutions a little bit yourself first and lead by example. Now, Rio looks good compared to BHP. BHP's got the biggest balance sheet other than our big banks in Australia, and yet they've done bugger all investment in renewables till now. They're starting to move, but 11% of their energy came from renewables last year. 59% came from diesel. And you just go, well, hang on. Blind Freddy could have told you could have used electric vehicles. You could have done something in the last 5 years rather than waiting. And then I'll give you one extra answer. If I get to hydrogen, I am all for green hydrogen. I see blue hydrogen as an absolute red herring by the fossil fuel industry. It's all about saying there is a silver bullet for LNG. It'll happen in the next 10, 20 years. So give us another 10 to 20 years to keep expanding our LNG operations, because there will be a solution. So they're talking about hydrogen blending in gas reticulation systems. They don't mention that hydrogen is 3 times the volume of methane. So, and therefore the energy density is, I'm not a scientist, I'm a finance guy, but you have to replace every single appliance attached to that hydrogen gas reticulation system before you pump the hydrogen down. So the idea that you're going to use a whole lot of existing methane gas reticulation infrastructure and then just replace it with hydrogen, I see that as very unscientifically proven. It's not substantiated by the science or by the engineers. It's substantiated by the marketing team, the lobbyist team at Woodside and Santos and Chevron and Exxon. So I really worry, like, the minute the EU brought out
if they're behind it, there's got to be something wrong with this message, right? If they're all
exactly,
they could have asked the question. Yeah,
I was talking about hydrogen at a conference 2 years ago, and this European guy comes on and he goes, look, the only country in the world that's pushing blue hydrogen is Australia. Why? Because Australia is the biggest exporter of LNG. It's a fig leaf. Now, with the right price on carbon, and if carbon capture and storage works and the regulators are applied and there's independent verification and monitoring and transparency, and it's all internalized, and if Japan's happy to pay $100 a ton for carbon capture and storage, and Korea and China, and by the way, they're not, but if they were, then blue hydrogen might work. But the taxonomy in Europe for hydrogen came out a month ago, and the taxonomy had a really, really strict definition of what clean hydrogen was. The minute that taxonomy was released in Europe, Woodside gets a front page spread in the Fin Review saying Australia needs our own taxonomy for hydrogen because this is punitive against blue hydrogen. In other words, it's actually aligned with the climate science. Well, no, Australia doesn't need a taxonomy that's bastardized to promote fossil fuel hydrogen. It needs a taxonomy that's credible to our trade partners. And when Japan and Korea and China act on the climate science, they are going to buy zero emissions or from Woodside. So blue hydrogen might be part of the solution. I doubt it, but at the end of the day, let's put a price on carbon of $100 US a ton and then see how competitive it is, because that's what they need for CCS to work. And at that point, Bob's your uncle, renewable energy wins hands down. So
totally agree. And Tim, I might just that's it. You've stop sharing. Okay, I was just going to say that time-wise is probably a great opportunity to maybe just open it up to the team. See if there's any other sort of questions, or if there's anything that we want to test out further. Any questions from those here, Robert? I noticed. Yep, go ahead, Robert.
Just a quick comment rather than a question. This time last week, I went to the launch of Greenpeace's campaign against Woodside's Scarborough field. They're bringing the Rainbow Warrior to Australia to sail up the West Coast to launch a publicity campaign to try and get Western Australia on side. Western Australia at the moment is a great supporter of Woodside. They're just the alignment between the east and the west coast of Australia has got a lot of work to be done politically and with the electorate. So it's an us and them mentality that needs to be resolved. So, Tim, have you got any comment on Woodside being the outlier? Scraping together or raking up everyone else's stranded assets and making a business out of it and flogging it as fast as possible for as long as it lasts, and then not having any sort of leave strategy when the dead cat bounce that Russia's caused finally ends.
Yeah, good summary, Robert. I agree. I would probably put Santos right up there with Woodside, and I'd throw in, for Australian climate science deniers, I'd throw in Whitehaven Coal. Right, we've got plenty of climate science deniers, fossil fuel incumbent industries, Chevron, Exxon, BP, Shell, Total, they're all operators here. But the three big Australian, Peabody, there are plenty of them, Anglo's okay, Yancoal. There are plenty of fossil fuel operators in Australia, but the vast majority of them are foreign multinationals. So hence why I say, look, the issue of tax reform, multinational tax reform and fossil fuels go hand in hand. But Woodside, Santos and Whitehaven are our domestic climate science deniers. All three of them are doing nothing to transition their balance sheets. Now, Woodside, I think we really need to attack their social license to operate. They should not be able to sponsor nippers. Like, to me, that's just corruption of our children, to push back on the science, to undermine the science. But things like that, where they're allowed to just sponsor away the football and buy. We had a chat at the start about the AFL, but they're able to just sponsor things. I mean, the Santos Wallabies, you've got to be joking, right? Would we allow a tobacco company to do that? Well, why do we allow a climate criminal to do it? But yeah, let me give you a different way of looking at it. Santos has said that over the next decade, they're going to spend by the end of this decade, they're going to spend $5 billion on low emissions technologies, right? So that sounds really good, right? It sounds like the board's accepting the science and starting to shift their balance sheet and their asset profile. But if you look at the 10 years to 2021, they spent precisely $0 on decarbonisation. Right, zero emissions technologies, $0. Now, I'm putting a caveat on. In 2022, they spent $100 million. Now, they did, so that is, it's moving in the right direction, but we're talking about 1% of their capex last year went on zero emissions technologies, and they actually prepaid for an electrolyzer in Oklahoma. They prepaid for it so that they could actually book it in 2022. Now, this is my reading of it. They don't say that. They just say, oh, we had to put the money down. They haven't even reached financial close on the electrolyzer in Oklahoma yet. They've already prepaid for it. Okay, the board hasn't actually approved the project, but they somehow managed to spend $100 million in December 2022, just so they could actually announce that in their climate report of March 2023. I'm being a little cynical here, but when you look at their $5 billion of intention to spend, most of it is carbon capture and storage. Now, how many operations in CCS has Woodside run in the last decade? None. Now, they're a passive investor in Gorgon's CCS project, which is the biggest nameplate CCS project in the world. It's 4 million tonnes per annum, and it's, by the way, operated for 6 years in a row, and it's never run in a year above 50% of its expected capacity. For 6 years in a row, it's failed to deliver. It's even if it's operated less days than it's not operated in the last 6 years. I mean, it's just a debacle. And yet Woodside's going, oh no, CCS is going to be the solution. Well, hang on, you've never invested in CCS. You've never actually demonstrated. CCS is a technology that's been around for 50 years. It's not an emerging breakthrough technology that Bill Gates talks about. It's a technology that the Norwegians have been doing for 50 years. Well, if Woodside really believed CCS was the answer, why haven't they invested real money in it? And by the way, who's going to pay for CCS? Because it costs you $100 a tonne to run CCS. And I reckon Woodside's been the #1 funder of Apia, who's been the #1 underminer of price on carbon in Australia for the last 10 years. So Woodside, look at what they do, not what they say. They pretend they believe the science. They don't actually have a net zero emissions plan for scope 3 emissions, which is 92% of all their emissions. They don't accept any responsibility for scope 3. But on scope 1 and scope 2, they built a 10 kilowatt rooftop solar business last year. So the single biggest fossil fuel company in Australia, and their climate report released in March 2023 trumpets they built a 10 kilowatt. Anyone here got a solar rooftop system bigger than 10 kilowatts? Put your hand up, please. No? Okay, you all have had solar for a while, because the average solar system being built in 2023 is 10 kilowatts for rooftop. And Woodside's got one facility with 10. Now, I'm exaggerating. They've got a second one with 61 kilowatts. They've got 2, like not megawatts, kilowatts. That's how little Woodside's invested. Okay, I'm not defaming them, because it's straight out of their own bloody report. It's just criminal that they can. And do you know what? I will defame them now. They go, oh, we almost had a climate strike against our board last year. We got a 49% vote against our climate report. Now, last time I checked, 49% is sort of like where Paul Fletcher sits in Bradfield. Like the swing against him, we only need a 2 or 3% swing and he's gone. and Bradfield will be a better place. But Woodside got a 49% vote against them last year. So the chairman, Richard Goyder, I've known him for 30 years. Richard goes, oh, we spent the last year talking to all of our major shareholders around the world. We've really listened to them. We've listened to them, we've engaged with them, and we've totally ignored them because this report for 2022 is identical to the one we put out in 2021. He actually says that. I mean, talk about a climate science Luddite. He says we've engaged with our clients, our shareholders, the owners of our company. They told us they weren't happy with our report last year. And by the way, we've written the same garbage this year. And by the way, they're actually going to get a climate strike in their AGM in May, would be my guess, because it only takes 1% more of their shareholders to vote against the same crap that they dished up a year ago for them to have a climate strike against them. They got the worst climate strike of any major oil and gas company in the world last year. So yet the board's asleep at the wheel. It's time for a new chairman at Woodside.
Julie? I think Julie, did you have? Oh, I thought you had your hand up. Sorry. Go ahead.
Yeah, I just think we should concentrate on the renewable side and less on the, polluters, because, market forces will dictate that they're just clutching for straws and they're just trying to hold on to whatever they've got. Those that see that there's a different future will win. Yeah.
Can I add something to that comment? And I think that's exactly on point. We do need to deal with the large organizations, but we're seeing those that are pushing the renewables, pushing the the circularity, the resource recovery and so forth. The ones that are becoming successful and are getting revenue are changing the market in the background. They're being approached by some of the biggest players to buy them and shut them down. And what's interesting, I would say that in the last maybe 6 months, but especially this year, this calendar year, we've talked to maybe half a dozen organizations who have specifically said we're absolutely not going to be talking to them. They're coming. Some of them, we even sat down, it was the beginning of this week, we sat down with one that was threatened that they don't have a choice. They're going to sell, otherwise they're going to shut off all their supply straight up there. Like they came, they saw them, told them they're going to shut them down if they didn't sell to them, and moved on. And so part of, I think, a lot of the work that is happening in the background is supporting those organizations and bringing them to the surface that they're visible to actually protect them from some of the big players from coming in and closing them down, and actually supporting their success rolling forward. Yeah, Anthony.
Sorry, Vlad, to jump in. I know we're at 11:29. We quite often do, people who get engaged in the conversation quite often do hang around for a good few minutes after the official session. But I just want to say, before anyone else who needs to go at 11:30 on the knocker leaves, I just want to say a huge thanks to Tim and to everyone for participating in the conversation. Tim, wow, huge gratitude for all the facts you've shared. Your passion shines through. It's really obvious. We're at a point in history where certain people will stand up and lean forward rather than sit back and panic. You're clearly in the first camp of people, and it's a good privilege to learn from you, to hear from you. And I'd personally be interested, if you are able to stay for a few more minutes, to try and work out how can we support, what it is that you're trying to do, because clearly you're heading in a direction. And if the good conversation wins, and if the quality of the conversations lifts, I don't know if you have kids. Do you have kids? Your kids, my kids, and every other kid on the planet will be able to enjoy a wonderful planet, as opposed to the dangerous trajectory that we're on right now. So huge gratitude for everything you've shared. If anyone does need to leave right now, please do. But please join me in giving a really big thanks to Tim.
Thanks so much, Tim. That was
absolutely.
Fantastic. And I'd love to invite you for a follow-up session, like once we get feedback from the videos and so forth. I think that would be nice, if not in a couple of months, to have you back to see where the conversation has progressed. Yeah, thank you so much, Tim. Appreciate it. Thank you, everyone. Anthony, thanks for pointing out the time factor. We were just so deeply involved in this one. We could go for another hour, I feel. Thank you so much.
Tim, wow, amazing. Tim, how can we help? How can we help what you're doing?
Yeah, I mean, this very group that you are helping by actually motivating each other, encouraging each other, and discussing the issues. I just think it's by sheer word of mouth and getting the story out there that this is a massive opportunity, and then getting behind people that are getting the story out. So, I mean, like I was just thinking as you were giving those final comments, people like David Pocock I find inspirational. I mean, not only is he one of the best wallabies in all-time history, but he's a beautiful, ethical man, and his wife's even better. People like Zali Steggles and Allegra Spender and Sophie Scomps and Kate Cheney. I've just abused her father, but Kate's very different to her father. She's as brilliant. I, by the way, Michael Cheney was my business mentor. He's a brilliant businessman, but he needs to accept the climate science, whereas Kate does. And so it's people like Kate Cheney standing up to bring the, call it middle Australia, or even where the Liberal Party used to sit, to change the conversation and think about equality, climate change, integrity, and bring that back to our democracy. And so I love the fact, I love working with the Teals. I'm very hopeful the state election tomorrow in New South Wales will see maybe the Teals will have balance of power. That would be my hope, because they're community representatives. They're standing for integrity, equality, and climate. And you go, well, what a better way to restore our democracy than to have people, leaders like that, who are actually listening to the science and acting with integrity and representing the people of Australia. Because I do think our democracy has been eroded, as it has in India, as it has in America and Europe. We've got to protect democracy.
Well said.
Yeah.
So what I picked up from there is what we can do is help share the story with the right people and help build momentum behind this narrative and the discussion and the arguments that you've put forward today.
Yeah, exactly. And that can, I maybe reluctantly or through ignorance, I went to a brilliant 2-day session down in Shepparton in Victoria. And it was hosted by Sam, I forget his surname, but the National Party member for the Shepparton region. And he spent 3 days, and I've never seen a politician stick around. Admittedly, he was the convener of the session, but 3-day conference talking about with business leaders in Shepparton about how they're responding to the energy transition and the climate crisis. And he's a brand new National Party. He hasn't spent enough time with Barnaby Joyce to be I won't go there. My hope is, and the reason we had the session, and it was attended by 10 people who've been working in this space alongside myself for a decade, the idea was to educate him and to get the message across that just because he's a National Party member, it doesn't mean he has to be a Luddite. He can accept and act on the science. They can try and reform their party before they go extinct. Because as I think, Julie, you said, I mean, there are dinosaurs like Woodside, Santos, and Whitehaven. They will die. I'm 100% with you. But the AGL example, which I think, Vlad, we talked about right at the start, is an example where it's far better if we actually transform the dinosaur into a transition company, get them to align with the science and move at speed, because AGL's got 4,000 staff and it's got 100,000 retail investors, and we can't afford for it to go bankrupt. Now, it could, and it was headed towards bankruptcy. Now it's actually got a chance at surviving and prospering. Origin Energy's transformed under Frank Calabria, I think, is the CEO there. It's transformed dramatically because it was a Luddite as well. So it's a lot easier if we transform the incumbent industry. But some of them, like Woodside, if they don't transform really rapidly, if they don't get a new chairman, I think Meg O'Neill, the CEO, understands the climate science, but her board is a pack of climate Luddites, and they just appointed 2 new Luddites to the board. You would have thought that would be an opportunity to refresh the board. They did it last week. 2 Luddites retired, and 2 Luddites, like one of them was 40 years oil and gas exploration. How's he going to bring anything to the board that they don't already have? So, yeah, at the end of the day, I'm agreeing with you. A dinosaur just dies. And so I don't engage with Woodside. There's no point. They're beyond redemption.
And we have the ability, just exactly sort of back to the comment that you made, Julie, was that, those who are coming forward, we have the ability to double down and support them, and I use the consumer piece, as someone who's hiring staff and so forth. They want themselves to salary package a car. Well, Origin is the only one at the moment offering to give you an electric vehicle. You know what? Why not? And so that transition, I know it's a really simple example, but there's, and then we can work with those on a much larger scale. That will only work with AGL because they've got the zone where we want to put, a resource recovery facility or a hydrogen generation. That's the only place we're going to look because they're doubling down on that. So we can support those and go, you know what? Yeah, I know Woodside wants to recycle something or other, from their, pipelines, blah. Sure. But that's like a drop of a drop of a drop, percentage. Actually, that's not real. So we're going to focus all of our attention to those that are doing the big things. But that's significant still.
But that with Woodside, though, that they're a gas company, right? That's what they are. They bought BHP's assets and they are heavily into gas. They all make profits in the short term, but what does the long term look like? And if you're a board director, I don't know how you can be a board director with what's going on in the world.
It's risk right there, yeah?
Yeah, because it's huge.
Doesn't seem rational.
It doesn't, no.
Yeah, let me give you one real example though. Exxon has Chevron has announced the biggest buyback in Chevron's history, $75 billion. So that is actually the board saying we are a dinosaur. We actually have a finite life. And we're going to actually embrace it, not fear it. And so I'm putting a positive spin here, but they're paying massive dividends and they're saying we will harvest the profits from the investments we've made in the last 20 years. We're not going to reinvest in our core business at a huge amount. We're going to return the capital because we know our investors aren't going to pay us for growth. So we might as well just be a cash machine. Now that's fine. That's accepting the science in their own way. If they can't buy into solar, so they could, but Dong Energy a decade ago, you're probably aware of the company called Ørsted. So Ørsted is the world leading offshore wind company. I know of it as Dong. Dong was the Danish oil and gas company. It was operator of coal-fired power plants in Denmark, and now it's the world's leading offshore wind developer. And so in a decade, they have gone from being a Woodside to being the single, they're a phenomenally successful company. They're deploying tens of billions of dollars. They're the world's #1 installer of offshore wind in the world. And it's an amazing company. It's a breathtaking company. It wouldn't be beautiful working for a company like that, but imagine working for Dong. And yet Woodside could change. I don't think they will.
They could. That's the thing, but that's what directors should do. Like look at what's happening to the world and diversify.
Yeah, which comes back to the question about Western Australia, and groupthink is very powerful, and unfortunately they're in groupthink.
Yeah, maybe that's right.
Yeah, I think that's the point that Greenpeace is going after, is the social license for these companies. And I think in the director community, in the AICD, have conferences again and again about the ESG and about doing the right thing in social capital and so forth. I think the other, if the AICD and the director community attacked them as being, really badly performing directors, and for the chair being, really, not following, correct directorial procedures, then we can embarrass them within the community that they really listen to, which is their own ego group.
Yeah, 100%, Robert. If Jim Chalmers came out and said every major top 100 company in Australia had to have a net zero emission scope 1, 2, and 3 plan, they have to align with the science or start to align with the science, because 2050 is not aligned with the science for Australia. Should be, as Macquarie Group says, 2040. But let's start with 2050, because Woodside doesn't even have a 2050 pledge. But yesterday I got really irate. You can have a look on my Twitter. I'm a big Wesfarmers shareholder. Michael Chaney is the chairman of Wesfarmers. He is my mentor. He was probably the best CEO I've ever met in my life. And yet their net zero emissions plan is only scope 1 and scope 2. And worse, like this is on their website, an investor briefing they gave yesterday. They're doing a 2-day briefing around Perth today and yesterday. Anyway, their chart is a bell curve. Like they say they're going to do all of their action to get to scope 1 and scope 2 net zero in the last 5 years before 2050. Like just criminally incompetent. I actually labeled it fraudulent. Like it's not a straight line. It's not we're going to accelerate effort and then do the hard yards last. It's we're going to leave it all until 2046 before we even start. It's just pathetic. And that's not even scope 3. That's scope 2 and scope 1. So
yeah. Well, scope 3 is sort of existential for those people. They see that as being their reason for existing. The irony is that Ampol has been certified by climate activists as a carbon neutral company based on their scope 1 and scope 2. The fact that their scope 3 are 100% polluting, but they are able to ignore it under that mechanism and be certified by the government's own agency is a little bit, it feels a bit greenwashy to me.
It is fraudulent. Good point, Robert. But that's up to ASIC to actually enforce the right taxonomy. At the moment, the Australian taxonomy says greenwash. If you do scope 1 and 2 zero, you can greenwash your product, even if when you put petrol in your car and burn it, it's scope 3, those emissions don't count for Ampol. So that's just criminal. Yeah, you're right. But that's a regulatory failure. Climate Friendly is doing the wrong thing by actually facilitating it, but it's actually the regulations that need to be modernized. We need to look at the whole cradle to grave life cycle. I think it's a whole different topic, sustainability and recycling. We've got to make sure that's in place on batteries, on wind turbines, on solar. We've got to change the whole rhetoric towards a more sustainable economy.
And on the large scale investment too, we're seeing the government is going after super funds that are greenwashing. So, you know, and I think that's a great sign, you know, like the ESG, but not really, you know, and I think that's fantastic because as investors and people putting in, you know, managing their super and whatever, there's not such large volumes of cash being invested in not real green. And I think it's good that that's being, you know, uncovered. And I think slowly, but it's coming.
No, I 100% flat. The fact that ASIC's actually taken Mercer Super to court for greenwash, and the irony is for 15 years, Mercer Super has been Mercer in Australia has been the advisor on ESG to every major super fund, and yet now they have fossil fuel companies in their ESG fund. I mean, that's basic ESG 101, and they failed it, even though they've been advising everyone else on the ethics of and morality relating to climate change, but they failed it in even basic due diligence in their own fund. So I'm really pleased, as you said, that ASIC's growing some spine and they're actually taking them to court, because that's the thing that makes directors listen. It's the personal legal liability